Lynn, great to see you here.
Thanks for having me.
So what are things looking like at this point? How's the pipeline?
The pipeline is strong. The pipeline's never been stronger. The power of the public market currency has never resonated more than it's currently resonating. However, as you know, and as you report on every day, we're in a period of deep uncertainty, and that's being reflected by the market. Market doesn't like uncertainty. So what that's caused is CEOs of companies who are looking to go public have postponed their plans, and they're just waiting for the market volatility to abate.
Can they do that for an extended period of time? Or are there some companies that just need cash? Would they rather go private?
Yeah, some of the companies that came out last year had a strategic reason to come out last year. But what you've seen is a lot of companies go back to the fundamentals, really hone in on what the priorities for growth are going to be, how to do that in an economically responsible fashion, look at their costs in particular, rather than looking to come to market without a business plan that they're able to execute on to get to the profitability standards.
It sounds like those are the types of things they should have probably been doing all along instead of just chasing after really cheap money or free.
Well,
right?
We're excited about the pipeline. We're excited about the amount of innovation that's coming to market. We're just, really looking forward to the time when the market volatility could abate just a bit so some of these amazing companies could come public.
Do you have to wait until the Federal Reserve is kind of done with its march to higher interest rates?
Yeah, I think based on the data that you've seen over the last two inflation prints, that's an encouraging sign, right? And you've seen the market react in a positive fashion to those encouraging signs that we're starting to get inflation under control, particularly the print that happened last week. 6.5% is a great number compared to the 8s that they were printing just 2 cycles ago.
Sure.
Can I ask Joe's question? It's a question. Yeah. Well, it's the question you asked of your competitor at NASDAQ, which was what you're thinking about crypto now. Given everything that's happened, does it change your view on crypto?
I've long said that crypto is a market in need of regulation. We need to know what the regulatory guideposts are. We need to know what a framework is to bring this asset class under the more traditional structures that have served volatile markets, volatile periods well, and that's more the centrally traded, centrally cleared types of frameworks. And I think this has just been further evidence.
But do you want to be? That's what she said too. Do you want to be in this business ultimately? If you could be, is this an asset class you like, or is this like? I mean, are you happy that you
is it an asset class?
Is it an asset class? Like, were SPACs an asset class?
Here's the thing: we're still at a point where people. Did we need to regulate Beanie Babies? That's what people call this. Did we need to regulate pet rocks? Did we need to regulate rat poison in Charlie Munger's term? If it's all those things, there's still a huge contingent of people that think this is absolutely greater full theory and that everybody's going to go, it's all going to zero and everybody's going to be bankrupt.
I don't know what the status of crypto in the long term is. Obviously, the underlying technology is good.
It's real.
The underlying technology has applicability outside of some of the cryptocurrencies, such as a Bitcoin or an Ethereum. Right. The underlying technology is what we're more focused on, and how to deploy that technology to add efficiencies to arcane processes that still, in this day and age, exist in markets.